Let's take a look at what's happening with house prices across the UK. And 2020 saw a big rise in prices, contrary to what some people were predicting when we entered the first national lockdown back in March 2020. Coming out of that, we hit the COVID bounce with a whole bunch of people who obviously have been sitting on their hands but had plans to move, bringing forward those plans to move and creating a really strong finish to 2020. Looking at the figures to the end of December, we've got a rise reported by Nationwide on their house price index of 7.3% for the year. Halifax, which was tracking above Nationwide for the majority of the year, actually showed a slowing of the housing market towards the end of the year and reported a year-on-year increase of 6%. Now that's still much stronger than was expected at the start of the year, even before we knew the extent of the coronavirus pandemic. And a lot of that comes down to pent-up demand within the housing market overall. The number of buyers registered has been outstripping the number of sellers registered for the majority of 2020, but also we saw a big shift in priorities over the course of 2020 as well, with a lot of people seeking to bring forward some home move plans, partly in response to the pandemic, but also in response to the UK government announcing a stamp duty holiday which runs through to March 2021. So abnormally for that particular point of the year, December was one of the highest volumes of transactions that we've seen since the mid-2000s, which with over 115,000 transactions going through in December, which is significantly higher than is normal for that particular point of the year. Mortgage approvals as well, well above average at 105,000 for the month of December too. That said, this is probably the high point and we're looking at a slowing in the growth of the housing market for 2021. Buyer instructions, seller instructions and sales agreed are still all in positive territory according to the RICS members survey. However, the ratio of those is coming down significantly from a peak point back in October and November 2020. The stamp duty holiday, we have to remember, only runs through until March of 2021, and there's also a scaling back of the support for Help to Buy coming later this year as well. So that's likely to mean a more subdued market. The other thing we've got to remember is that stamp duty holiday, which has been bringing forward so many plans for home movers and second-time buyers who are upgrading to maybe deal with priority shifts like extra space for home working or garden space, that stamp duty holiday hasn't been helping first-time buyers at all. And first-time buyers traditionally is what drives the UK property market. So with a kind of lack of first-time buyers in the market, with the Help to Buy scheme being phased out, and also with first-time buyers more likely to be affected by some of the negative economic effects of the COVID-19 lockdown measures in the UK and the associated effect on business. We're looking at potentially redundancies in the first half of this year, a number of businesses already in trouble as government support measures are slowly being phased out as the UK seeks to find a way out of the coronavirus crisis. Expect that there won't be huge runaway growth in 2021. That said, most economists are looking at a growth range somewhere between a very modest rolling back of some of the gains of 2020, maybe 2%, up to a growth range of 4%. We need to remember that even though there are some economic headwinds ahead for house prices in 2021, there's also still this chronic shortage of supply in the UK property market, and that's been exacerbated by last year's number of lockdowns, because that slowed down a number of construction projects, and we're expecting that completion figures due to be released in March or April of 2021 will be significantly lower than what was expected at the same time last year in terms of what would be completed in 2020. So all of that said, I think we can expect a flat to moderate growth over the 2021 period for house prices. As always, if you're looking to add to your property portfolio as a professional investor, make sure that you're doing your due diligence carefully. Make sure that you're buying correct for today's market. Don't anticipate any runaway growth to save any particular property deal, and make sure that it meets your overall strategic objectives as well. If you are buying for rental income, make sure that rental income stacks up and the cash flow looks good. If you're buying with an eye to flip a property that you're refurbishing, make sure that you're very, very clear on what properties are selling for in today's market before you make that purchasing decision.